Joining us now on the Megacast once again is a stock market coach and an options trader. Jason Brown joins us from the Brown Report as we talk about investing, the financial markets, and more. Jason, thank you so much for being with us again.
Tyler, thanks for having me. Always good to be here.
Yeah, good to have you on as well. It's an important topic we have on the docket today for people as we're continuing through some interesting financial times here, not only in the US, but worldwide. A lot of people worried about their pocketbooks right now, but also worried about their retirement as saving for retirement on a surface level, very similar to what it's been in generations past, but the mechanics of it have really changed. What are some of those key differences that we're noticing in our modern society, especially of late, given the circumstances that we're in? And how do those changes implicate how we should be approaching saving for retirement?
So I think some of the biggest changes that most people may be seeing right now are affecting people that are already in retirement and maybe not necessarily people that are going into retirement, and that's inflation. And so if you budgeted or planned your retirement and said, hey, I'm going to live off X amount of dollars every single month, and this is how much I'm going to withdraw from my investment account. Well, if you think about the pandemic took stocks to like an all time high, and now they've come back down, but technically you haven't really lost any money because they soared so much during the pandemic with all the money that came in from the government. So from that standpoint, your account should be doing okay, even though lately the market has been down. On average, you're probably about even or a little up. But the problem is the things that you pay for every day, like food, gas, maybe if you had to buy a new car while you're already in retirement, those things are more expensive. And so it's pulling out more money than you might have budgeted for when you went into retirement. Now, if you're not in retirement, there's still time for the prices and different things like that to come down. But I think the people who are affected the most are the ones who are already in retirement, and these inflated numbers are kind of throwing off their monthly budget.
So let's talk more about that. Let's talk more about the people that are currently experiencing that. They're in retirement, they've saved, they've gone through their entire career, they got ready for retirement. It's an exciting time. You got some freedom behind you to live out the later years of your life as you so choose without the constraints of work. And now you're in the situation where our economy has kind of thrown a monkey wrench into all of that. And now you got to either rebudget, maybe consider taking on some part-time work to make ends meet. And in terms of what can be done with the money that you have saved and what you have in pocket month to month, maybe through Social Security or through a pension or something like that, what are your suggestions in terms of them approaching, maybe bridging some of those gaps through the markets? Is that something that you would suggest being a potential option for them, or should they be looking at some other safer options to bolster them over time?
So there's always an opportunity to jump in the market and kind of take control of your financial future yourself. The question really is, do you have some disposable income while you're in retirement that you could potentially go and make a better return than what you're getting from your retirement account? And then do you know how to do that? If not, I think it's important to realize that inflation doesn't last forever, or higher prices don't last forever. And so maybe you have to cut back on traveling. Maybe you have to maybe not get the car or all the options on the car that you wanted. But that's okay. That may only be for a short period of time. And even if you have to pick up a second job, or as they call it, a side hustle, I know it probably sounds weird to be going into a side hustle as you're in retirement. But there's so many things you could do, like driving Uber, driving Lyft, doing Uber Eats, to make some extra money to bridge that gap if you need to. The last thing you would want to do, though, is put yourself in harm's way and risk money that maybe it's already earmarked for retirement and that you could potentially lose trying to make more money versus just managing your lifestyle to conform to the new inflated prices, at least for this short period of time.
Kind of in that in between zone too, between people that are investing now, getting ready for their retirement years and years down the line, and those that are in retirement, maybe struggling in some cases to make ends meet or to stay on budget given the state of inflation. Are those people that are on the cusp of retirement? They've been planning for this for years. They're coming up on that, that date or that set of dates that they had in mind for when they were going to call it a career and ride off into the sunset into retirement. Obviously, one way to change those plans and adjust for what's going on in the economy is to push that date forward. But for those individuals, how should they be approaching the market differently right now than those that are already in retirement to, maybe stay on that schedule or prepare themselves for whatever situation the economy might be in when they do reach that date, if they've already made that decision and have punched through to their retirement on a given time.
So, like you said, they can obviously push the date back. That's probably the natural, easiest thing to do is push the date back. The other thing they could do is they can meet with, hopefully they've met with some type of financial advisor or ran their retirement through some type of financial calculator. And they might realize that maybe they need to put more money away now to still hit that date. And so it's like, if I, was putting 20% of my income away, maybe they need to increase it to 25% or 30%. And they can do that while they're still working so that they don't have to move back their date. That's always one option. And then the other thing is if they move back their date, it's not really the end of the world. Because if you think about how stocks have sold off, there's an opportunity right now to pick up some really great companies and some really great investments at a really good price. And so if you're able to pour more money into the market, into the right stocks or sectors and industries, and then push your retirement back a year, 2 years, whatever the case may be, it's a good chance that you'll have a bigger and better retirement nest egg because you're able to pick up on some great companies at low prices versus if you're ready to retire in the next 6 to 12 months, you're pulling money out as the market has come off of its high. So you're not pulling money out at the highest price, you're pulling back off the lower price. But if you can be buying at the lower price and wait for it to turn around and go back higher, because statistics shows over time you average about 11 to 13% return in the market. So that means if you can wait another year or 2 year, the money that you're putting in now could earn potentially 13% 1 to 2 years in a row, which would be a good 26% increase in your retirement account. And so those are things to think about. Do I put more money in and push the date back so that I can take advantage of the market pullback? Or do I put more money in now to hopefully bolster the return in the short term, or at least offset the inflation in the short term to still allow me to come out when I wanted to come out?
More information from Jason and the Brown Report, as well as resources, including his podcast, the Money Markets and Mindset podcast, which you can find on various podcasting networks, including Apple Podcasts, Stitcher, and on Spotify, can be found thebrownreport.com. As of course, we're joined by Jason Brown, stock market coach and options trader, on today's edition of the Megacast. When people are thinking about their investments, they're thinking about right now, they're thinking about their retirement and the savings, given the economy and the state that we're in. A lot of people are concerned because of the impact of inflation in their daily life right now, and they're looking for safety. Is and it's a tough question because, as we've always talked about, it's about knowing what you're doing and having some of that back knowledge before you go into it. But is there a sense of safety, in your opinion, going into the stock market in this sort of a time to really bolster your retirement and get that ready for when the market ultimately does adjust itself back to some semblance of normality or positivity at the very least?
Well, I think what's safe about investing right now is you're not buying at the all-time highs. So could you imagine if you bought 6 months ago or last year at the all-time highs? A lot of stocks have been cut in half, so 50%. And so I think psychologically, we think the best time to buy stocks is when they're going up. But the problem with that is nothing goes up forever. So if you're buying things at the all-time high, it's more likely that you have room to fall, for the stocks to fall, and you have room to lose money. So in my opinion, and it's just my opinion, when things are down and things are kind of horrible, I think Warren Buffett coined the quote, when others are fearful, be greedy. And so when everyone's talking about recession and inflation and it's a bad time to invest, it's technically, if you really clear the noise, it's really a good time to invest. It's a good time to get things at such a low price. Because if you look at Amazon, who's been, valuation's been cut in half, you look at Google, who's been cut in half. I'll just take those two companies. It's unlikely that they're going to get cut in half again. It's unlikely that they're going to lose 75% of their value. That's what would have to happen for them to get cut in half again. It's also unlikely that these companies are going to go to zero. So sometimes we think, I don't want to lose all my money. It's like, well, that would mean Amazon would have to go out of business. Google would have to go out of business. Tesla would have to stop selling electric cars, and we all go back to gas cars. So when you think about it logically, technically now is the best time to buy because there's less room to fall and more room to go higher once we get past this whole inflationary period. So I think if we think about it like that, there is safety in investing right now, whether you're doing individual stocks or you're doing sectors. So you maybe don't want to get caught with an individual stock. You can look at the XLK, which is the technology sector, which will have Apple, Facebook, Google, Amazon lumped into it. And I think lastly, the other thing that people have to think about is retirement is a game plan. And the game plan doesn't really change in the next 30 to 60 days because the market's up or down. I want people who are listening to this, whether they're in retirement or they're going into retirement, whatever the situation is, it's a result of the planning that you did 15, 10, 10, 15, 20, 30 years ago. And so now is the time, if you aren't in retirement, you should be saying, what happens if in 15 years when I do retire, if inflation is back, if things cost higher, and you should be baking that into your retirement plan. But now that inflation is here, layoffs are here, it's not too many levers that you can pull and just change things on a dime and just modify 30 years of planning in 6 to 12 months. So just keep that in mind as well. And sometimes the best modification is just modifying your lifestyle if you didn't bake inflation or some type of rainy day scenario into your retirement. And it's not the end of the world. As long as you got your health, your family, um, everything is okay. The news will have you thinking like the world is over, but you're still alive. You have your health, you have your friends and family, and you have some money in retirement. You just might not have enough to do all the things that you want to do, but that's okay.
Yeah, you make some adjustments, you get informed, you learn more information, and you make decisions and those adjustments with informed opinions and some information from experts behind it. Jason, appreciate your time. I want to give you another couple minutes to talk about anything else that you believe would be important for our audience to be keeping in consideration right now on the retirement topic, on investing, on the markets, or anything else we should be keeping an eye on.
One of the things I would say for people who are thinking about retirement, sometimes I think millennials think like retirement's so far away. I don't have to think about that right now. But one of the things that everyone should be doing is getting a retirement calculator. You could Google them, there's probably free ones online. But really, the question you have to ask yourself is what type of lifestyle do I want to have in retirement? Meaning, how much is my house? How much is my car? Or even if your house is paid off, how much do I want to set aside for repairs? Because you might need a new roof. How much do I want to spend on vacations? How much do I want to spend traveling? And you want to bake that in and say, okay, this is how much I need in retirement every single month. And then what lump sum of money do I need to have and what type of return do I need to make? So let's say you need $3 million dollars and you need to make 3% off that. It'll tell you this is how much you can withdraw every month with $3 million dollars making 3%. And it's either going to match the lifestyle you want or it's not going to match the lifestyle you want. But it'll let you know what target you're aiming for and gunning for over the next 15, 20, and 30 years to live that comfortable life in retirement. So I think we should be thinking about it now, even if we feel like it's, so far away, 15, 20, 30 years away.
Good place to start with some healthy advice and information is at thebrownreport.com, as well as listening to Jason on the Money Markets and Mindset podcast on Apple Podcast, Stitcher, Spotify, and more. Okay. Again, more information, thebrownreport.com. Jason, thank you so much for joining us.
Tyler, thanks for having me. Appreciate it.